Hello everyone, welcome back to another video. Today I will try to take some beautiful trades. Let's go. This is going to be my first trade with this huge margin of safety. Okay, this is called margin of safety. When we deciding to take a trade, for example this doji break, okay, instead of entering immediately, we can wait for this to drop. Okay, if you look at the previous candles, every single candle has shadows, right? So the logical and the best thing to do is enter at the safest possible place and wait for this shadow to be created first. Okay, when it's coming down, it means that if it goes up, it's going to be a shadow, right? So we enter somewhere we wait for it to move this much to the opposite direction, and then we enter. This is called margin of safety. This will help you to win a lot of trades that you're supposed to lose. For example, this one. If I was entering immediately, I would lose this trade. All right, that's not the only reason. You can enter, like let's say this is a ranging market to the downside. Okay, this is a range, and if I draw a common point of rejection from somewhere here, you can see that these rejections has been connected together and there's a common line between them. So after this line is like crossed, the candle cross this line, you can enter. So this is one of the ways that you can optimize your entry and have more chance to win your trade. Okay, but you have to have this set up first. For example, this one, it was a doji break, it was a morning star pattern, you know. We got already got the setup, and we optimized our entry using the common point of rejection. Let me look for other opportunities. The market has been crazy lately. I don't know why. It's really hard to find good setup. It's really hard. And okay, yeah, we got this demand area down here. This is the demand area. I will make it red. So if I go back to 1 minute, you'll see that we have a QM setup. We also have this trend line. So in order to have the trend line, we need a clear ABC. So we can draw the trend line. This is a trend line. This is gonna be, oh shit, this is gonna be my, what is this? It's gonna be my QM zone. Hold on. And this is the demand area. Okay, so I will wait for this one to come down, and then boom, I will set an alarm here. Let's look for other opportunities. We need to be really patient with the market. Oh, this is 51%. Okay, whatever. Okay, this is another common point of rejection. See that? First, second, third, fourth, fifth. Fifth and sixth takeable on the common point of rejection. This is the seventh, eighth. Okay. But we need to have the setup first. We don't see a setup yet here. Let's see. All right, it seems that we have. No, we don't have a trend line yet. It didn't touch it, so I will just move on and look for other opportunities. All right, it seems that we're having an exhaustion. No, I will take a small trade on this one. Okay, I'll go with the buyers small. Okay, 250, let's go. It's marginal safety again. See, I let the candle come down a bit and then go. So in case we have a green, we have a red one, we have more chance to win this trade like that. Let's see. See if we're gonna win this. This is not a good trade. That's why I go smaller. I was waiting for this one to close something like this. It would be an exhaustion candle. It means that the buyers are exhausted, so they create this candle just for sellers to get into the market, okay? But we got this rejection, so it's not an exhaustion candle. It would be nice, but it didn't happen. That's fine. I'll go back to 1,000. We are dynamic with our trade amount just to control the risk, okay? If I was taking 1,000 of this one and it was a losing trade, it would be so frustrating because it's not a short shot, it's not a nice trade, and it would mess up my psychology. That's one of the problems that most of the people have. When they see no setup, they take some random trades, they lose that trade, and then they doubt themselves, they doubt their strategies, they keep losing. All right, we have a QM. We got the engulf. Let's go back to 30-second. I'm looking for a supply. Let's get it. This is the supply. So if the price comes up, I will enter at this red zone. Pretty simple. Let's get it. It's coming up. I already set an alarm here. If the price comes up, I'll be notified. I'll take a trade here with marginal safety. I will wait for this one to go up a little bit and then I will enter, okay? I'll wait for this one to go up and then I will enter, because if you look at the past, every single candle has some upper shadows, lower shadows. So we will enter at that shadow. If we get the entry, it will be nice. If not, it's okay. We will wait for another opportunity, okay? Come on, it didn't really go up. I was planning to enter somewhere here. That's fine. All right, we have a Doji trade here. I take this trade right now. I'm expecting a rejection right here. Let's see. Yeah. So today's trades all are margin of safety. Doji broken, right? We don't enter immediately. We wait for margin of safety because previous 15 to 20 candles all have lower shadows. We want to enter at that shadow, okay? We want to enter here, here, here. So we wait for it to create that shadow and then we enter. This is called margin of safety. You can watch this video. I have more explanation about it. All right. How many trades did we take then? Okay. It's coming up. Okay, we got another Doji. Got this little QM. I'm not taking this one immediately because I want to just check the QM to see if we have engulf. We don't have engulf for the QM. And this is not happening inside of a range, okay? If it was happening inside of a range, it would be nice, but yeah. For example, if the Doji was happening here, for example, if this was a Doji, I would take this trade. Because we need this kind of market to take the Doji trades. Okay, look at this. Another Doji. But I'm not taking it because we're not having a ranging market. Alright, this is too big, man. I want to take... Oh shit, look at this entry. I want to take two more here. I'm expecting a green candle here. Because, as you can see, we got this ABC. I'm pretty sure we have some demand area inside of it. Okay, I'll mark it. We'll go to the lower time frame to see that. Alright, first of all, we got this engulf. And that ABC, which is a demand area for us, rally, base rally, is inside of that engulf. So that's one confirmation. Another confirmation, we got demand area inside of it. Okay. Yes. It was a winning trade. And this is an exhaustion candle, okay? Exhaustion candle. We got this QM down here, but it's going to take time to come down. I will look for other pairs. We'll just keep searching for good opportunities. This will come up eventually. I will enter and I will take this trade for sure. We got this common point of rejection. And if this running candle comes up, I will take it. Because if you look at the past, we don't see more than 2 consecutive same color candles, okay? For the green ones. See? Only 2. So here, the preference is having a red one. Please come up. right, I'm waiting for this one to come down a little bit. I want to enter with margin of safety. All right, I entered right now. Let's go one more time. I'm expecting to come down because, you know, the market basically moves and switches between support and resistance all the time. In the last place it touched this resistance, so here I would expect to come down and touch down here. Doesn't matter if we get a green one here, I know that it should come down. Okay, and again we got the margin of safety, as you can see, in case if we get the green candle we're not going to lose the trade. Margin of safety is going to save a lot of trades for you. Okay, and today's trades, almost all of them has margin of safety. You can see some of them are, you know, the color candle was different, but we still won the trade because we entered with margin of safety. So take this serious, guys. I hope you enjoyed. Make sure you use the link in the description to join the Telegram channel, and peace out.